All right. How's everybody doing? Yeah, very excited about this AMA, the future state of Web3. Where are we building to? We have a great group of speakers with us, and they'll be diving into sort of the trends that they're seeing and in the market right now, and share some insights into what they're currently working on. And this is the first AMA of a four-part series. So we're leading up to the inaugural post-quantum blockchain day, which is hosted by the Abelian Foundation, and it'll be held in Hong Kong on October 4th. So yeah, stay tuned for these next three AMAs that'll be coming up over the next couple of weeks. And yeah, come join us in person in Hong Kong on October 4th. We have the early bird tickets. I think they're still available for the next couple of days. So yeah, we'll share the link in the chat. And yeah, hope to see everybody at the conference. So without further ado, let me introduce the speakers. We have with us tonight Duncan Wong, who's the founding member of Abelian, which is a post-quantum privacy-preserving blockchain. We have Jonathan Gill, who's the Senior Tokenization Director at HashKey, which is a regulated crypto exchange here in Hong Kong. Arthur Tan, who's CEO of FILLiquid, a DeFi platform for Filecoin storage providers, and also Rebecca Chow, who's with ViaBTC Capital. So thank you to the speakers for joining. And maybe before we just jump into the questions, I could go around to all the speakers and everybody just introduce, 30, 45 seconds what your company is doing. Maybe if we go in the same order, starting with Duncan, then Jonathan, then Arthur, and Rebecca. So yeah, Duncan, could you tell us just very quickly what Abelian is all about?
Sure. Can you hear me, Sam?
Mm-hmm.
Great. Thanks for having me over here. So I'm Duncan. I'm the one of the founding members of Abelian, and I've been basically working in cryptography, doing the research in cryptography almost all my life in my career. So I've been a professor doing research and teaching the cryptography, post-quantum cryptography. Mainly the digital signature is my research focus. And also, I've been running this project called Abelian as a post-quantum blockchain project for a while, for a few years. And right now, I'm still thinking that it's just the beginning, and we have a lot of things to do. So this is super exciting to see all the listeners over here, all the audience over here, and also our folks over here joining this AMA. So looking forward to having our first flagship day, the post-quantum blockchain day, gonna be in Hong Kong, October 4th. Yeah, looking forward to meeting our old friends as well as new friends as well. Thanks.
Awesome. Jonathan, you there?
Sure. Yep. So I'm Jonathan Gill from HashKey. So HashKey is a virtual assets company licensed in Hong Kong, Singapore, Japan, and now Bermuda. So we're an exchange, custodian, broker dealer, and an asset manager. And I'm in the tokenization team, so I structure security and non-security token offerings.
Good deal. Arthur?
Hey, thanks, Sam. Can you hear me?
Yeah, we can hear you.
Cool. Yeah. So our first and foremost, thanks Sam and also the Abelian team for the invitation to this inaugural EMA session. My name is Arthur Tan, the Chief Executive Officer of FILLiquid. FILLiquid is it's the only fully decentralized open source with a governance token which is built on the Filecoin network. And of course, Filecoin being the largest decentralized storage DePin primitive. So super excited to be here, sharing insights about what's the trend of Web3 moving forward from here. And of course, looking forward to be also learning a thing or two from the rest of the other panelists.
Awesome. Glad you can make it.
Yeah.
Rebecca, are you there?
Yep. So hi everyone. I'm Rebecca from ViaBTC Capital. So we are the investment arm of the third largest Bitcoin mining pool in the world, and we also have our own exchange called CoinEx. And so our investment thesis, we don't only invest in Bitcoin stuff, but we are more thesis-driven VC, meaning that we analyze market trend and the market sentiment to do investment.
Awesome. Cool. Well, yeah, thanks for the intros, and thanks for joining. So maybe Duncan, I can start with you. So quantum computing is probably the least understood of all the tech buzzwords going around, or one of the least understood being thrown around. And so I saw, even though it's not widely understood, something like 55 billion was invested this year from public and private sectors globally. So there's clearly a lot of funds, moving in. Can you just briefly share with us the general state of quantum computing and why it's so important, and then more specifically how it relates to blockchains?
Sure, Sam. Actually, you have made a lot of questions over here. I'm not sure how many minutes I have to address all those, but maybe I just keep it short and more focused. So basically, quantum computer is relying on some quantum mechanics. There is a term called superposition, right? So superposition basically means that there is a photon or some kinds of element which spin and which can be used to represent 1 and 0. But basically that little element, we call it the qubit, can actually represent 0 and 1 at the same time with different probabilities. So it's quite different from our conventional computer. Our conventional computer can use a bit to represent either 1 or 0 rather than both 1 and 0. So quantum computer has this kind of magical property which can represent both 0 and 1 with certain probabilities. So you can imagine they can spin clockwise and anti-clockwise at the same time with different probabilities. And then we can actually design some kinds of, we call it the quantum algorithm, so that we can make use of this property to do some parallel computations rather than sequential computations. So that actually makes the quantum computer way more powerful, exponentially more powerful when compared with a conventional computer, because we can actually do the calculation in parallel. And it's very related to blockchain because the beauty about blockchain is decentralization, security, and of course, when we talk about the blockchain trilemma, we talk about security, decentralization, and scalability. So about the security, we talk about digital signature. And the digital signature is believed to be secure against conventional computer. But unfortunately, actually dated back to 30 years ago, we already know that there is an algorithm, a quantum algorithm called Shor's algorithm, which can basically break the conventional digital signature used by almost all the blockchain systems in a matter of hours or even minutes, if the quantum computer become mature. So getting back to you, one of your questions is that what's the status of the quantum computer nowadays? Basically, right now, for example, some major companies like IBM, D-Wave, they have already announced that they can actually build a quantum computer which has thousands of qubits. But basically, if you want to break, for example, say Bitcoin network, I mean the underlying digital signature, you need about, say, 100,000 qubits. So if you just compare, like right now, IBM claims that later this year, they will be able to build a 4,000 qubit quantum computer versus you actually need 100,000 qubits to break the underlying digital signature of Bitcoin. It seems that it's still a long way to go. But actually, if you actually look at the pace of the development of the quantum computer, you can basically see that every 2 years or less than every 2 years, the number of qubits doubled. So it's like early last year, we will be able to build a quantum computer which had less than 2,000 qubits. And now we are talking about building a quantum computer which is going to have 4,000 qubits. And then probably 18 months later or 24 months later, we will be able to build a 8,000 qubit and so on. So kind of like an educated guess from now on is that in the coming 5 to 10 years time, the quantum computer will become so mature that breaking the underlying signature, digital signature of Bitcoin is just talking about a few hours or a few minutes that you can break it. So people may say, hey, you still need 5 to 10 years in order to break those systems. And why do we need to bother about this quantum computer development? The thing is that there is a term called hack now, decrypt later, which means basically you hack this system now, or you steal the public keys now. For example, you steal all those ledger data now, and then you can just wait for a few years' time, and then you can actually make use of a quantum computer to reverse and get the private key. So I'm not sure how many of you know about the wallets of Bitcoin that the corresponding private keys have been gone missing. So basically, at this moment, just a very conservative estimation, there are already a few million Bitcoins that their corresponding private keys have already gone missing or forgotten or basically stolen or something. So you may just imagine like 5 years from now, when quantum computer become very mature, and then what if those hackers can take control of those millions of Bitcoin suddenly, overnight? And what would be the impact to the Bitcoin network? Yeah, so this is actually one of the major concerns that we do have. And that's basically the urge for us to think about how we will be able to migrate to some other blockchain systems which are already quantum resistant, or we call it the post-quantum blockchain. And that's basically I call it my objective or value proposition that I started working on this project 6 years ago. So I started working on this project together with a few other researchers. At that time, it's just a conceptual level about how we will be able to build a post-quantum blockchain system. And then we spent about 4 years to work out all the details, publish all the papers. And Abelian was born 2 years ago. Yeah, so that's basically the current status of quantum computer and how it's related to the security of blockchain.
Yes. Well, yeah, glad we have something out there already before the quantum computers get too powerful. So yeah, moving a bit to tokenization, Jonathan, if I could ask you, it seems like we've been on the cusp of tokenizing everything for years now. And I know you've been focusing on this area for quite some time, since your days back at DLA Piper, where you were working on Toko, and now with HashKey. Could you just share with us the progress that you've seen over the last few years in this space, and kind of the biggest barriers that still exist to achieving kind of this vision of tokenizing everything?
Yeah, sure, Sam. Look, I think, I've been doing this for a while, but it still feels a little bit like the internet in the 1990s, in that, things are very relatively this, but it hasn't sort of gone completely mainstream yet. So, I mean, I think there are probably a few waves. When I sort of first got into the sector, we had the ICO boom sort of around 2017 or so, and you had a lot of tokens were just being issued on the strength of flimsy white papers. Looking at this as a solicitor, the jurisdictions just didn't have regulations. There were no regimes, and a lot of the things, frankly, were just illegal, but there was no one to enforce it because there was nothing to enforce. Then I think there was sort of the next wave was, there were a lot of private blockchain proof of concepts. A lot of them were done by financial institutions. And there was this, some jurisdictions were starting to make noises, but it was all sort of sandbox, walled garden sort of thing. So nobody was really having open trading. And then now I think you see jurisdictions devise specific regimes and they welcome virtual assets. So obviously here in Hong Kong, Singapore, Dubai with a specific regime like VARA, and you see in response that there are more and more investment grade assets from sophisticated issuers that are have more sort of complex tokenomics. So will it sort of go mainstream? I think it will, but I think it's really a regulation led area. So and in terms of barriers, look, I think the hard thing especially for RWA, which is sort of the hot buzzword in the area at the moment, is there are a lot of friction points because a lot of RWAs are highly regulated and they're deeply entrenched in legacy paper-based systems. So, for real estate in Hong Kong, for example, you have transfers of land are still subject to land registry and the IRD for tax. And those things are paper-based. And until you digitize those and put those on a blockchain, you are always going to have that friction point. Any transfer you make is going to be subject to those registries registering your transfer. Same with shares, you've got the companies registered. So, you've got these friction points that even though you might have, the regulation for tokenization, you are still going to have these TradFi blockers, if you like.
Mm-hmm. Yeah, they're connected with. It's kind of a massive digital transformation that needs to happen, sort of at the governmental level. It sounds like.
That's right.
Okay. So, Arthur, if we can move a bit to sort of DePin. I know you've been working in this space for quite some time, and you hear a lot about DePin these days. And so could you just share a little bit on sort of where this narrative has come from and why DePin is so important? Maybe a few examples of how Web3 dApps are kind of still relying on centralized infrastructure underneath the hood, so to speak, and the risks, I guess, that are associated with that.
Yeah, sure, Sam. I think first and foremost, let me just break it down into understanding the complexities of DePin. I mean, being known as a decentralized physical infrastructure, but of course, this is just a buzzword that it has been used very lately, and everyone is jumping on the bandwagon. The building is a DePin project. Even people are just saying the narrative of DePin is going to be the vertical that's going to bring the largest influx of new money, into this highly anticipated of the new bull run coming in. But prior to that, we all understand that DePin, which is known as the proof of physical work, which we have been using for quite several number of years. So I'm going to explain, I think to begin first, just to give the context of DePin and just to really explain it in the simplest way that everyone can understand. So just imagine DePin it's defined in such a way that, just imagine you and your friends want to build a huge playground, with swings, slides, and a sandbox, but instead of just one person, paying for everything and building the entire playground, all of us right now decide to bring something to share. So one friend could possibly bring a swing, the other friend bring a slide, and someone else bring toys for the sandbox. And each person is responsible for their own thing, but everyone gets to play with everything together. So in such a way, so you get to enjoy a big fun playground without anyone having to do it by themselves. And because everyone is bringing something, so everyone gets to decide how to use it and also taking care of it together. So my understanding of DePin and the narrative of DePin, it's really kind of like that. But instead of building a playground, it's really all about people coming together and work together to create things like the Internet of Things, storage, and other services like community-based of wireless network, using their own pieces but everyone able to use them at the same time. And because everyone is sharing it, there's no particular party that's in charge. So everyone gets to decide how things are done. And at the same time, whoever is going to contribute to the entire ecosystem will be incentivized as well. So, I think by just taking this, narrative, we have really seen. So then your next question is it's like some of the use case that have been happening in this ecosystem, right?
Yeah.
I'll give you for example. I think the easiest way is for me to define to begin with is definitely storage. I mean, in today's world, we're living every day. The world consumes about 400 terabytes of storage. And just trying to imagine that that is equivalent to approximately about trying to imagine watching a 2 hours movie, and you play that back and forth for the next 26 years, and that is kind of the total amount of data that's being used on a daily basis. So I'll start off probably sharing about FILLiquid, which of course being the largest decentralized storage, DePin is primitive. We're talking about I mean, while we are living in the world of AI era right now, and the two most essential ingredients that's needed to feed AI is the compute power and data. So there will be more entities, there will be more individuals that will be focusing on the importance of data. And of course, while data is ever evolving and increasing, then hence the next things we want to talk about hey, I want to look for more cost efficient kind of data service. If we look at the centralized of data, 1 terabyte will easily cost you $22. But versus if it's through a decentralized data storage provider like FILLiquid, that's going to cost you about 17 cents for every 1 terabyte. And we are talking about savings 121 times, essentially. And this is it's like the biggest use cases that I can really think of, just within that storage space itself. Of course, we probably have heard of like Helium network which has been around, that where they're being known as a community-owned wireless network, and that where our individuals and also businesses they deploy these wireless hotspots, and they earn rewards by providing coverage to the IoT devices, right? So this creates also very decentralized, a low-cost wireless infrastructure, but essentially it's more to reduce the reliance of those traditional telecom operators. And most importantly, it's also enabling the connectivity in all these underserved areas. So yeah. So what I'm really super excited about this DePin space, that where I will start seeing that there will be more projects that's going to build on. I think this is Sam was speaking about the real estate earlier on. And I think that's also real estate was getting more expensive. And we're talking about also the undivided land fraction which is gaining a lot of popularity too. Very recently I was in Bali for the CoinFest Bali. I was speaking there, and I encountered a lot of projects which are really building undivided land fractions, allowing the users to be incentivized and to earn rewards by owning that piece of land and also renting that piece of land to others as well. And these are real land we're talking about. And this is where DePin were able to enable decentralized property management systems, where the property owners, tenants were able to interact directly without any centralized intermediary. And this, of course, it goes back to reducing the cost, and also increasing transparency.
Hello there. Sorry, everyone, for the technical difficulty just now. We're starting on our spaces from our Chinese handle. My name is Jeff. Sam and other speakers will be with you shortly and continue the conversation.
Hey, guys. Sorry about that. Can you guys hear me?
Yep.
Nice. Yeah, Twitter was just not being very cooperative. Arthur, you still there?
Yep, still here. Was I talking to myself?
No, we could all hear you. For some reason, it got cut off, but we can hear you loud and clear.
Wasn't quite sure how long was that. It's like, I know after once I was done talking and I realized, hey, what happened to the session?
No, we heard probably at least five minutes into your answer. 5 or 6 minutes, yeah.
All right, okay.
So maybe we'll just give it another minute, see if people can join back in.
Okay, it looks like some of us are coming back.
Yeah.
After our technical difficulty just now, the spaces got interrupted while Arthur was speaking.
So yeah, Arthur, did you just want to close out your?
Yeah, I really hope I'm not the cause of that technical issues. But yeah, that happens. But yeah, I mean, well, where were we? I mean, we're talking about the DePin. Explain this. So essentially, well, DePin is it's still the big buzzword. And everyone is super pumped, and super sized with like, oh, the whole DePin is narrative. I personally think, if we are going to talk about like whether DePin is can ever achieve the mass adoption, I think there are also a lot of challenges. I would rather want to say challenges than risks that which are really associated, and like some of the real challenges that that I can just think of straight from my head right now. I think the user experience for DePin right now is still rather very complex. I single-handedly personally have get involved in certain of the DePin projects, and I just think that the UI UX it's super challenging to understand. And if we want to talk about for it to be widely adopted, then it has to really be user friendly, simplifying the whole entire user experience. Even like your grandma, my grandmas were able to understand it, or to even like non-technical users were really able to easily participate and benefit, from the whole DePin network. I think that is something really got to work on, because essentially, I mean, just the DePin narrative is it makes perfect sense. Who doesn't want to be incentivized, to be rewarded, and sharing resources together. But however, I think it still goes back to the user experience. Scalability is it's also another big challenge as well, because right now, I mean, as DePin just really rapidly growing at a very fast pace without everyone beyond everyone's imagination. So maintaining that efficiency and performance, I personally think that we're really able to deem as a challenge, because there's just too much dependency right now on a single node reliability. And for it to behave reliably and consistency, that still really leaves us with a huge question mark. And of course, whatever new verticals in the space, of course, we are always going to be bogged down with this whole regulation, with the compliance, clarity, and that is something that's still currently very vague. The whole entire decentralized nature of the DePin networks still really raise a big eyebrow. The regulatory issues, especially like concerning about the data privacy, the security, and legal responsibilities as well. So I just think that while you haven't really hit the mass adoption, I mean, still a very, very young and new verticals that everyone's just trying to jump on and trying to figure out everything, scrambling to figure out. But essentially, I think this is something the compliance regulations frameworks will probably be in place, and that will probably also be one of the biggest challenges in order for greater innovation that keeps growing and happening.
So does DePin and DAOs go hand in hand, basically? Like you can't truly have one without the other?
Yeah, I mean, then it goes back to the interoperability of it, right? I mean, it's whether you were able to interact seamlessly, with the existing centralized infrastructure and also the decentralized system. So that is it's also to have this both hand on hand, that's also leaving us as leaving us a big mark as whether what is the interoperability is between different DePin networks, and how traditional networks it's absolutely crucial for a greater, broader adoption for this space to be taking off.
Yeah, cool. Okay. So yeah, Rebecca, if you're there, I just wanted to ask you a question now on DeFi. We've come a long way since DeFi summer 2020. I think there was like 1 billion in TVL back in 2020 in the DeFi world. And this summer, just a few months ago, we passed the $100 billion TVL mark. And so, that's huge growth. And just wanted to see sort of what you thought or what you saw as the trends that really drove this growth, and sort of what are you most excited about within the DeFi space today? Oh, gotta make you speaker first before you can answer, I guess.
I'm inviting Rebecca to speak.
Yep.
Okay. There she is. Okay.
Hi, there you are.
Yeah, so yeah, it's big questions, and like I'm trying to break it down and make it more concise. So we can see that from 2020 till now, like the journey has been extraordinary. Like we see the TVL.
I think Rebecca's currently muted, but she is a speaker for now.
Yeah,
can you hear me?
I can hear Rebecca.
Yeah. Okay. Yeah. So like I was talking about, like we are seeing the TVL crossing 100 million right now. So you can see that it reflects both increasing capital inflows and growing confidence in the DeFi protocols. And I believe like there are a couple drivers, and one of the biggest drivers of the DeFi growth, it will be the development of more scalable infrastructure, particularly like layer 2 solution like Optimism, Arbitrum, and CK rollups. Like back in the days, Ethereum congestion and high fees, high gas fee, they were like a serious barrier for some small investor. I remember the day, I tried to trade, some shitcoin, and then the fee is like, 50, 100 like USD, and it's impossible. So, like with the layer 2 scaling solution coming online right now, DeFi has become more accessible, lower transaction fee, and increasing speed. So that's one of the reasons. And the second reason is that, there are more increased institutional participation. So back in the days, again, DeFi was predominantly just retail driven. And over the past few years, we can see increasingly interest from institutional investors. And, they are bringing in capital, like they are interested in lending protocols, yield farming strategies, and providing like more stability and liquidity to the market, right? And I think, and the other important point, I think, is that there's a diversity of the DeFi products. Like in 2020, DeFi was mainly focusing on lending, borrowing, and simple yield farming. But today, it got very complicated. Like we have decentralized exchange, we have synthetic assets, we have insurance protocol, stable coins, and decentralized derivatives. So, all these kind of things, come together and, just help to grow the DeFi side, in the blockchain world. And what I'm really excited about is really the real world assets tokenization, so RWA, because like DeFi platforms, they are moving beyond crypto native assets right now, and we are now exploring how to tokenize real world assets like real estate, bond, fine art, even car. So this, I think, it's a important bridge to connect the traditional finance world and the decentralized finance world. So yeah, that's kind of my thought.
When you say that the institutions are coming in, is that mainly just like hedge funds, or?
No, not really. Like not really just hedge fund. There are more like even private investors, like PE, those kind of
I
people
see.
who are entering in. Yeah.
Cool. Okay. Nice.
Sam, can I just jump on and that's adding or what?
Yeah.
I mean what she was talking about. I really echo everything what she said. And I essentially think that the biggest next wave of DeFi is we're going to see. I was just having this conversation that imagine like every DePin project, it's going to require a DeFi part of it in their project, because come and think about it, I mean DeFi is being the biggest crypto, the biggest use case in the Web3 space and the crypto space, and it's proven, and of course, yes, go on beyond just land borrowing. But essentially, the essence of it is still creating liquidity. And imagine like every DePin project out there also needs liquidity, and without fail, there will be a DeFi element in every single DePin project. And I think that's going to be huge, and that's going to be really, really big. And I think that is something that what we're going to see is the DeFi is going to really experience another round trajectory growth, in that space. Yeah.
Cool. All right. Yeah. When you think about it, it kind of makes sense. DePin, in order for DePin to really work, there needs to be some DeFi. So, Duncan, can I bring it back to the quantum world? And previously in the call, you laid out sort of the risks that these quantum computers are posing to Web3 and hacking blockchains. So I just wanted to ask what is Abelian doing sort of specifically to address this risk? And at the same time, I know Abelian is very focused on privacy, and so how is Abelian, not only preventing quantum computers from hacking the blockchain, but also preserving the user's privacy?
Yeah, sure. So you are right, Sam. The main objective of building this Abelian ecosystem is to basically bring a quantum resistant platform to everybody to run their favorite applications, like what the panelists over here talk about, the DeFi, DePin, and all the applications. I think having a strong, secure platform for everybody to work on their applications without worrying about the near future threat, that's very important. So that's why, from Abelian's perspective, what we are trying to build is to make sure quantum resistance is basically like a given thing. It's not like, okay, it's optional. You have to work much harder, build a lot of complicated stuff in order to have that kind of post-quantum feature. So post-quantum, or so-called quantum resistant, we want it to be just there, right? Like when you use cloud computing, or when you use internet, when you are watching your favorite Netflix or YouTube clicks, you don't need to think about internet because it's already there. So our dream is to make quantum resistant security as the default, as the one which is already there. You don't need to worry about that. So when you use your wallet, the wallets are already quantum resistant. When you are sending your transactions out or receiving your tokens, quantum resistance is already there. And then building on top of it, I think it's very important for us to have the privacy assurance that we need. So what I mean is that not every single application requires the same level of privacy assurance, right? So for example, when you are having an enterprise transaction, you might just want your senders and receivers, or just your close group of peers, to be able to find out the transaction detail, but not the public. Or for an individual, for example, you might not want everybody or your neighbor to know your bank balance, right? So just imagine you have a wallet, and say right now, if you send your token to your neighbor, then the neighbor can basically find out the balance of your wallet right away. You just need to send one token out. Then everybody, your neighbor, your friends, they will be able to find out, hey, Sam, you got 1,000 Bitcoins or maybe more. Yeah,
I wish.
So, yeah, I think you have more. So, yeah, so basically, yeah, I just want to receive one little 0.0001 Bitcoin from Sam, then I will be able to find out how many Bitcoins you have. That's the current issue. And if you even compare with the current banking system, we don't have that, right? So we have the big brothers, of course, they can see our balance, but we are not supposed to share the balance with our neighbors. So on blockchain systems, I think the minimum we would like to get is that when you send the transactions out, you don't need to worry about disclosing your balance of your wallet as well. So that's why I think like multi-level of privacy assurance is very important to a blockchain system. It's kind of like a fundamental feature for a blockchain system. And that's why we focus a lot on the privacy part. So just to share a little bit about some of the privacy-related features about Abelian to you guys. By default, if you use, for example, a mobile wallet, Abelian Pro mobile wallet that you can download from iOS or Android systems, those app stores and so on. When you send your tokens out, it's totally private. What I mean by totally private is that nobody can trace it. Nobody can find out your balance. Nobody can find out how much you are sending out. For example, you are sending 10 ABOTs out. Nobody can tell whether it is 10 ABOTs or 1 ABOT or 1 million ABOTs. So it's totally encrypted, while at the same time, your balance will also be secured. We also have another version that you can basically choose to use I call it the pseudonymous level of privacy. Is that for some of the use cases, for example, say you are a miner, or you are sending tokens to a centralized exchange. The privacy is basically not there. You don't care about that kind of privacy of for example, the transaction amount. You actually want to have that transaction amount be disclosed because of, for example, some KYC requirements or some compliance requirements. Then you can actually choose to use pseudonymous level, and it's going to be much faster because it's less protected in terms of the like applying those ring signature technologies. You don't need to apply the ring signature technology. You don't need those zero knowledge proof systems. And you can just simply send it out just like Bitcoin. And it's going to be more efficient, but you are only keeping that pseudonymity level, which means your transactions will be traceable. And also the balance of your wallet will be known. So that's why on Abelian, at least this is my philosophy, is that I would like to provide this kind of options to all the users. So depending on what kind of applications that you use, it's up to you to choose which privacy level you would like to choose and what kind of use cases that the privacy requirements that you would like to achieve. And that's why it's kind of like layer 0 is the quantum resistant, and then layer 0.5, which is the privacy tools that we are providing. And then everybody can actually issue their own tokens on Abelian. And also remember, we have this layer 2 coming up very soon called Q-Day. The testnet is already out, that you can actually get the Q-Day tokens by staking Able. And we are just trying to enable all the developers and all the users to be able to run their smart contract in a quantum resistant way. And also they will be able to make use of these different levels of privacy to protect their assets.
So can you like toggle back and forth between the different levels of privacy, like within the Abelian wallet?
Yeah, that's a good question.
Is it that easy?
Yeah, the answer is yes. So what we have designed is that you can basically just send, say, tokens from a fully private wallet. So for example, first of all, you need to create, say, two wallets, two different types of wallets. One is a fully private wallet. Another one is pseudonymous wallet. And then when you send tokens, say, from a fully private wallet, say 10 ABOTs, to a pseudonymous wallet, for that particular transaction, the amount is going to be known to the public because you are actually sent it to a pseudonymous wallet.
Yeah.
But if you think about the other way around, if you have 10 ables in a pseudonymous wallet, and then you will send back to a fully private wallet, people can tell that you are actually sending 10 ables from your pseudonymous to the fully private wallet. But because the fully private wallet address change every single time when you send tokens out, so the trace will stop over there. People will not be able to trace anymore after you send these 10 tokens to the fully private wallet. Yeah. So basically you can just toggle, or I call it just transfer or switch between these two wallets. Yeah.
Cool. Yeah, always nice to have that privacy option. Cool. So Jonathan, you mentioned about some of the barriers in terms of tokenization of real world assets. I just wanted to see if you could speak a little bit to kind of what you're doing at HashKey and how you guys are working through or around these barriers, and where are you seeing the biggest opportunities in the next year or so in terms of tokenization?
Yeah, I mean, there's a few ways in which we're approaching that, Sam. I mean, firstly, to continue from what I was saying before, we look at the regulatory restrictions and guardrails and see what is possible. And it's then a question of trying to devise a solution that will work for the SFC or the MAS or whatever it is. So sometimes that might mean that we end up talking to clients and saying this is the art of the possible, and then just trying to solve something that will work for them. And then also trying to drill down to work out what a client really wants. So for example, if I give you an example of a regulated industry, that would be, say, horse racing in Hong Kong. Now everybody knows what owning a racehorse entails, but if you try to own a racehorse, you can only do that if you're a member of the Hong Kong Jockey Club. So straight away, that means that you have a very small number of people who can actually own a horse. The next question you want to ask yourself is, do you actually really want to own a horse, right? Like, do you really want to be responsible for training it, paying for its upkeep, its food, its transport, all that kind of stuff? Or do you really want it just a share of the winnings when it wins at Happy Valley on a Wednesday, right? And that they're two very different things, right? Legally. So you don't actually own the horse if you do that. You just own a share of the winnings, right? So it's a very different aspect. So the person who owns the horse is not necessarily the person who's entitled to the winnings, right? And vice versa. So that's why we look at things from different angles to try and strike a balance between what we can do and what issuers want and what investors want. So in terms of like the opportunities, I think it comes back to what I was saying before. I think that the opportunities are there. It just has to be better understood. I mean, when I think about the biggest advantage of blockchain and tokenization, I think it's the trustless recording of data. And when you have that, you can really apply that to different industries and see what that can do for you. So if you think about horses, horse racing clients come to us and they care a lot about bloodlines. They want to know that this horse's parents were whatever, and they won these races, and and their parents were this, and and so on and so forth. And when you have that due diligence in a trusted ledger that's immutable, that makes things much easier, because you don't have to if you want to go back generations and generations to make sure the bloodline is what you think it is, that's a good thing. Same with art clients. They want provenance records to make sure that this painting isn't a fraud and it wasn't painted yesterday, right? So if they know that it's been displayed in this gallery and then owned by this person and then sold to that person, right, that's a great thing, right? So I think looking at that and then trying to see how that can be applied to different industries and solving different problems is where the opportunity is going to lie.
Mm-hmm. So it's all about the data.
That's
about
right.
The data and the provenance.
Yep.
Okay. Arthur, are you so your company FILLiquid, you mentioned sort of decentralized storage as one of the main use cases of DePin. Could you just share a little bit about how FILLiquid is helping Filecoin with which is the largest or one of the largest decentralized storage networks? Could you explain a little bit how FILLiquid is helping in that as sort of the main DePin primitive for the Filecoin ecosystem?
Absolutely. So probably to share a bit of a history of a bit of a Filecoin. Essentially, the main utilities of Filecoins to really be getting the storage providers who are known as the miners to everyone. And in order for them to be expanding their storage efficiency and expanding their storage capacity, they require Filecoin. So so Filecoin has been around, I mean, like since 2014, and then they have gone mainnet, 2020. But it was only until last year, Filecoin has built a Filecoin virtual machine. Probably everybody know it as FVM, which is compatible with EVM. And ever since then, it's opened up a new horizon, like the apps, and of course then DeFi, really literally just jump on it. So, but prior to the FVM that was established, basically what this miners they have to do, they actually have to borrow it from the centralized lenders, and which is a borrowing rate that has always been very, very expensive at a very high borrowing rate. We're easily talking about it goes all the way up to 40%. They have to over collateralize even up to 150%. And imagine yourself access being a storage provider, running a mining business. Essentially, you are really paying a very hefty fees to it, and trying to pledge this Filecoin as a collateral. It is an extremely expensive cost for the miners, and they can't even increase their network powers without Filecoin. And of course, most of them they have to start looking for external investors, because 10% is going for the hardware cost, 90% is to purchase Filecoin. And imagine yourself as a storage provider, as a miner, you are often caught up in situations either our financial burden or cash flow disruption, because you always have to keep acquiring Filecoins, and your Filecoins is being locked in the node for also a certain period of time. And a period of time, we're talking about 6 months. And hence, if you need more data, if you need more data service, you need to acquire more Filecoin. So this was all before the FVMs was established. So it was last year, early last year, the first quarter, March 2023, the FVMs roll out, and that's where FILLiquid participated as the Ethereum and Filecoin hackathon, and our technical development has emerged as a champion. And then it took us for us to really assemble the key people in the team, and we started going to market since October last year. And then we went through rigorous testing of testnet, and we just recently launched mainnet, which was on the 23rd of July. And going back to what really FILLiquid it's all about. Essentially, is really creating liquidity to the Filecoin ecosystem, but primarily is to be solving the real big challenges for storage providers, which are known as our borrowers. Right now, they were able to borrow Filecoin at any point of time from the liquidity pool, and they pay a lower borrowing rate. Currently, our borrowing rate is about 5%, hovering between 4.5 to 5%. because it's based on the utilization rate. And of course, they pay this borrowing rate, and this is what the lenders means, like anybody who's listening out there. If you have FILLcoin, if you're going to stake it from the centralized exchange, you're going to make a very miserable 1 or probably maximum 1.5%. But right now, when you start staking, you were able to earn a higher interest from our liquidity pool. Sorry, my AirPod is. Sorry, can you hear?
Yeah.
Oh, okay. Yeah.
There it is. Yeah, no worries.
Yeah, my AirPod is ran out of battery. Yeah. So right now, as a lender, you were able to earn a higher APY, by the staking from our liquidity pool. Essentially, the returns are derived from the borrowers. And on top of that, as a lender, we even go above and beyond, for our lenders and also for our borrowers. When you deposit FILLcoin, you are able to own our liquidity staking derivative token, which is known as FIT. This value of FIT will gradually increase every time when the borrowers repay back the loan. So imagine one FIT will one FILLcoin, it will increase gradually every time, when the borrowers repay back the loan. And on top of that, we even go extra mile, and really going back to it's just really to be increasing liquidity for the FILLcoin. Once if you're able to farm LSD tokens, and that's where you also will be earning our governance token as well. And then by becoming one of our governance token holder, you were able to have a say in our project. In terms of either you want to suggest any of the features, or either you want to adjust, or you want to modify any system parameters of the protocol. You have a say in our projects. Essentially, FILLiquid is really built for the community, is by the community, because we are just fully decentralized. Of course, that governance token that will be listing. We are going to go undergoing listing soon. So stay tuned. That will be also by Q4 once the market, hopefully the market is sentiment start improving. But all in all, at the end of the day, this is really solving the big liquidity gap for the FILLcoin. And we strive, and our aspiration of our protocols is to ensure that more storage providers were able to acquire and obtain FILLcoin at any point of time, just to really match, to really keep up with the demand of decentralized data storage in the world that we're living in. And with that, hopefully then we'll see FILLcoins price to be pumping up again, like how the previous all-time high too. So
Cool.
Actually that's what we are achieving right now.
So you're essentially trying to reduce the borrowing rate that files the file storage
Absolutely
would have to pay.
It's the reduction of borrowing rates. The storage providers need not to lock their assets for a long period of time. Right now, they were able to obtain any time, and once they repay back, and that's it, and they can always loan back, from our protocol again. And lastly, there's no over collateralization that's needed for them. So it's cool. It's really a very big win for the storage providers.
Yeah, and we'll keep an eye out for the governance token listing.
Yeah. Stay tuned.
Cool.
That's going to be something exciting. Yeah.
Okay. So Rebecca, the honor goes to you for the last question. I just wanted to ask you about Bitcoin, actually. So seems like it's kind of entered this new phase in its life, going from this one-trick pony of only a store of value to now there's all this stuff being built on top of it, over 80 L2s, I think, are live. They have DeFi, they have NFTs, all the stuff being built on the L2s, and so. Yeah, I just wanted to ask you kind of how this happened, the sort of renaissance of the Bitcoin network, And what do you think is the most promising project in this new ecosystem?
Yeah, so Bitcoin has indeed entered a transformative new phase. And how does this happen? I think first of all is that Bitcoin is a layer one network, right? It is designed to prioritize security and decentralize over like speed and scalability. And then this makes it very difficult for Bitcoin to support like complex application, and high throughput like we see on other blockchains like Ethereum. And however, like we can see that there is a growing demand for both developers and users for more utility beyond Bitcoin's use as a store of value. So this one reason why that we can see the Bitcoin ecosystem is kind of flourishing right now, because this demand has driven like innovation in building the second layer solution to extend Bitcoin's functionality. And the second one is Lightning Network. So you can see like the success of Lightning Network, they launched as a kind of like Bitcoin L2 scaling solution, and it's one of the earliest attempt to address the Bitcoin's limitation, and it changed everything. Like it allows fast, low cost transaction that eventually settle on the Bitcoin main chain. So so beyond Lightning Network, there are also more, the infrastructure has improved, like the Taproot upgrade, and there's like enhanced smart contract capabilities, So the Taproot upgrades, I think, went live in 2021, and which is actually like a kind of critical turning point for Bitcoin, because it improved the privacy, it also reduced transaction costs, and most importantly, it enhanced the scripting capability of the Bitcoin. So it make it easier to build like application, including DeFi and FFT. So I think that this upgrade is pretty important, for the innovation of the Bitcoin ecosystem. And what I'm thinking is like promising project is everything. I think it's the Bitcoin Fi. So if you haven't heard of Bitcoin Fi, it's actually the idea of bringing DeFi to Bitcoin, the ecosystem. So and the idea of Bitcoin Fi is that users, they want more just to hold Bitcoin as a store of value. Back to the point, they want to generate yield, they want cash flow, and they want income from their holdings. So in this field, I think one of the most exciting projects is Babylon, because Babylon is kind of the egg layer on Bitcoin, which integrates Bitcoin like with proof of stake ecosystem in a trustless and in fact efficient manner. So Babylons, they allow Bitcoin users to participate in the security of POS change without compromising Bitcoin's core function. So core feature, sorry. So that's pretty exciting, and yeah. So this is what I think.
Cool. Just one follow-on question. Is all of this activity going to make the price of Bitcoin go higher? That's what I really care about here.
Yeah, I mean, I think like the price, all these activity, I think it was seen as to maintain the income for miners, because you need them. If there's no miner, there's no Bitcoin.
Right.
If the whole thing is going to fall apart, the whole crypto is going to go to zero. So I think I see this way, all these kind of like innovation is one of the way, like I think it's very important, for the miner to maintain miners' income. And the second one is also, kind of pushing the Bitcoin price up, because, without this innovation, people doesn't realize that, there are more usage to Bitcoin, and will be, more willing to buy, or willing to buy it as a, like a testing ground for them to like a gateway drug into crypto Bitcoin,
right?
So, but I think the price is because there are more institutional players coming in, and we also have the ETFs, those kind of thing. I think those kind of thing plays a lot. Will be very important, in fluctuate in the price of Bitcoin.
Can we get a price prediction? Do you do this?
Price prediction? I've done this before. I'm not going to do it anymore.
Not in public. Do any of the speakers want to venture a a price prediction from Bitcoin in this bull market? I don't blame you if you don't. Okay, maybe nobody wants to. I'll say 100,000. That's my prediction. Century
Not
mark.
financial advice.
Not financial advice. Yes, yes. Okay. Well, yeah. I think that brings the AMA to a close. Maybe just real quick, do any of the speakers have any closing comments they'd like to share, or?
Yeah. So yeah, thanks Sam for hosting this. This is really great. And also for all the audience over here, if you haven't heard about the Abelian or if you want to check out, please feel free to follow us on the Twitter or X, and just download the mobile wallet and have a spin of it. And also, if you're a miner, feel free to download our software and start doing some kinds of mining as well. And do check out our physical event on October 4th. So I will be there. Our folks will all be there. So looking forward to meeting you guys as well. Thanks.
Awesome. Yeah, and the next AMA will be on the 19th, September 19th. So yeah, stay tuned for that. We'll share more about the next speakers, and thank you everybody for tuning in. Sorry about the technical difficulties. But yeah, everybody have a good night, good day, and hope to see you next time. Thank you. Bye-bye.
Thanks so much. Goodbye.
All right. Cheers. Thanks, guys.
Cheers.